Welcome back, everyone, to the Malaysia Money Matters show. It's the 4th of June, 2025.
Great to be back.
Today, we're jumping into the latest news affecting your money. We'll start here in Malaysia, then broaden out to the global scene.
Sounds good. We've got some interesting company-specific stories and wider market trends to unpack today. We'll look at performance, sentiment, and how those international developments are, playing out locally.
Okay, let's kick off then. First up, British American Tobacco Malaysia, their shares, well, they've hit a near four-decade low. What's the story there?
Yeah, that's a significant drop. The sources are pointing to a pretty sharp 22% fall in their first quarter profit.
22%, wow.
It is. And it seems linked to lower sales volume. Partly seasonal, they say. But the big persistent issue is the illicit market, the black market.
Right, so even if analysts think things might improve later in the year, getting back on track for the full year sounds challenging.
It does. It really highlights how something like the illicit trade isn't just a minor nuisance. It can fundamentally impact a major player's performance, makes them vulnerable.
Okay, shifting gears a bit. Cypark Resources, some major changes happening on their board.
That's right. The sources confirmed Sri Abdul Wahid Omar is stepping in as the new chairman,
Okay.
and Moris is moving into the group managing director role.
And the thinking behind this is, what, better governance, more transparency?
Exactly. It looks like a move to strengthen their leadership structure, especially as they handle those renewable energy projects.
Makes sense. Speaking of strategic moves, Dalium's finalized an acquisition, I see.
Yes, they've wrapped up the deal for a 70% stake in PTOSA Industries Indonesia. That was about RM 31 million.
And what does that give them?
Well, it really boosts their presence in Southeast Asia. Specifically, it adds valve maintenance capabilities, which strengthens their oil and gas services quite a bit in the region.
Interesting. Now, something impacting a lot of listeners, the EPF, their Q1 investment income was down.
Yeah, down about 13%, bringing in an RM 18.31 billion. The main reason cited is, unsurprisingly, global market volatility, especially hitting equities.
But despite that dip, the diversification helped, and member contributions are still growing strongly.
Absolutely. That diversified portfolio is crucial. And yes, the growth in contributions and overall membership, it suggests the domestic job market is holding up reasonably well, even with global markets being choppy. It's a good reminder for you, the listener, that even huge funds feel these waves.
Right. Okay, let's connect these individual stories to the broader Malaysian market outlook. Analysts sound a bit wary.
They do, yes. CIMB Securities, for instance, actually cut its year-end target for the FBM KLCI.
Our main index.
Exactly. And that's mostly down to those disappointing Q1 earnings we saw, particularly in sectors like banking and oil and gas.
And an investment bank mentioned a confidence crisis? That sounds dramatic.
Well, they tied it directly to the global trade uncertainties. That kind of environment makes investors hesitant, keeps them on the sidelines.
But not all doom and gloom. They see some bright spots.
Yeah, they do point to some specific areas like certain REITs, real estate investment trusts, and some banks. It suggests that even when caution is the word, there are still resilient pockets if you look closely.
Okay, now here's a fascinating one, kind of at the intersection of regulation and industry. The Ministry of Health confirmed AMIGI, that's the Ministry of Investment, Trade, and Industry, issued an interim manufacturing license for nicotine e-cigarette devices to a foreign company.
Right, and what's really noteworthy is this happened even though some Malaysian states actually banned vape sales.
So it raises questions about regulatory alignment, doesn't it?
It certainly does. It sends kind of mixed signals about where that industry is heading in Malaysia. Navigating these complex regulatory spaces isn't easy.
That's a perfect lead-in to the global picture, which seems completely dominated by trade tensions right now.
It really does feel that way. The U.S.-China situation is just lingering, casting a shadow. President Trump's accusations about China breaking deals. Beijing dismisses them, of course, but it keeps the market on edge, especially with a potential call between Trump and Xi maybe happening this week.
And we're seeing real-world effects already, right? Manufacturing activity actually contracted in May in both China and the U.S.
Yeah, the survey data points directly to the tariffs as the cause.
Right.
It's not just talk anymore, it's clearly impacting economic activity.
And this uncertainty, it's making central bankers pretty cautious, too.
Definitely. You look at the Bank of England, Governor Bailey is sticking to that gradual and careful line on any potential rate cuts. He specifically mentioned the trade turmoil clouding the outlook.
Meanwhile, the Bank of Japan Governor Ueda, he seems more confident Japan can handle tariff impacts, but still admits there's downside pressure.
Exactly. And even in the Eurozone, where inflation dipped below 2%, normally a green light for rate cuts, the European Central Bank still has to factor in the uncertainty from these trade tensions.
It really shows how interconnected everything is.
It does. And adding another layer of pressure, there's growing chatter about high government debt levels in places like the US, Japan, the UK. That's becoming a focus for bond markets, too.
So when we pull all these threads together from today's sources, what's the biggest theme that stands out for you, for our listeners?
Well, the interconnectedness is huge, obviously. But maybe the most striking thing is how global friction, particularly these trade tensions, isn't just some abstract headline. It's directly hitting Malaysian company earnings, it's shaping our local market mood, influencing central banks everywhere, and even trickling down to specific regulations here.
So understanding that direct link from geopolitics right down to your own finances, that's crucial right now.
I think so. Seeing how events seemingly far away can ripple back and touch your investments, local businesses, that's key.
It really drives home the need to stay informed.
Absolutely. Keeping tabs on these connections is vital if you want to navigate what's happening.
Well, thanks for walking us through all that today. It's been a really insightful deep dive. And for everyone listening, remember to subscribe to the Malaysia Money Matters podcast to keep getting these key insights.
Thanks for having me. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.